Hey, good morning, everybody. It's Brian. It's Tuesday, 6th of October, here for just a really quick run through what I'm looking at for the day, what I'm considering as a potential trading plan. I'm going to run through the numbers and then let you guys get on with your day and go from there. So what are we looking at for the day? Let's start over here. First things first, we do have some news coming up later today, 9:40 Central, 10:40 Eastern. Mr. Powell is going to be speaking. He's going to be talking about the economic outlook for a Association of Business Economics. So this will be interesting, especially during the Q&A. Things could get interesting if there's some blurbs that come out of that with potential leading indications of what might be forecasted for the remainder of the year and into the next year. So, be careful around that. I mean, obviously, it's not like a planned announcement where you get a specific number and see like an immediate reaction, but you can see, things happening in the market, especially, if there's some unease around what might be said, you might see some volume come out of the market, creating a little more of a choppy situation. But, barring anything out of left field, it should be kind of business as usual today. But do be aware, if we see some big swings around this news event, don't get too excited about that and try to jump in chasing the market. Just be aware if it's during this, call it 9:40 Central to, 10:40, 11 o'clock Central. So that would be, 10:40 to noon Eastern. If you're seeing some craziness in the market around then, just make a note to yourself. Remember that could be due to Mr. Powell speaking. There's a lot of other stuff going on. There's always going to be other things that can come out of left field. You've got election news. You've got Trump with the coronavirus. You've got coronavirus itself. There's always something that could come up and impact us, and that's why it's so important to have a plan. Know how we're going to approach the market and do that consistently. As far as talking about plans go, let's start over here in Forex land. We go over here. What are we potentially looking at trading this morning? Yesterday we were looking at the Euro CAD. Today you can see the Euro and the CAD have moved pretty much right together with one another. There hasn't been a big divergence to speak of. That translates back into what we see here, which is limited movement. If you look at the Euro CAD, it's only moved 36 pips for the day. That's way off of what its average typically is. That tells us there's a lot of opportunity there. We've only moved 36 pips. Average is, into the high 80s, 90s area. So definitely some opportunity there. Does it mean it's gonna move? No, absolutely not. But based on, just reversion to mean, there's opportunity there. Other things to watch though, the pound's been a big mover today. Even with movement so far, before the U.S. session begins, even with this big push weaker, over here, even with this big push weaker on the pound prior to the new session beginning, which starts here in about 3 minutes, we still see opportunity there as well. If we look at the pound versus the dollar, pound versus the CAD, we've moved respectively, pound versus the dollar, we've moved 90 pips on an average of about 120. Pound versus the CAD, we've moved 113 on an average of about 140. So, there could be some opportunity there. Dollar's been pretty flat, not really going anywhere. CAD's been fairly flat as well, but it is above the midpoint. So, if we come into the new session and we see the pound, start to be sold off again, start to move back down to the weaker side, and we see the CAD start to show some strength, that could be a nice pairing, pound versus the CAD, for that quick, 20 pip hit, that quick 20 pip hit on a breakout. So, but we need to wait and let the conditions really come together. Same for the Euro versus the CAD. It's not as nice. We would have to see one of these make a decision, one of these really start to push to strength, one start to push to weakness in order to be able to pair those together. And same with the Euro versus the USD. I very seldom even look at it because it's typically ranged out by the time we get in here. But today, euro versus the USD, I mean, that's 35 pips on an average of about 80. So, there could be some opportunity there as well. If this euro continues to push to strength and the USD continues to weaken as the new session begins, even that could be a good breakout for us. So there's a lot of opportunity this morning over here in Forex land as far as currencies that are moving or have good potential for movement. So what to choose that comes down to, because today, a lot of times we're limited. We don't really have anything to choose from, or, we have that one very clear currency pairing that we can put together. Today, we've got to kind of sort it out and think through what's the best one for us. And, with that said, it's tough. I think I'd like to see, into the first, let's say 10 minutes of the session, if we really start to see some movement on the pound, if we start to see the pound turn here and move back to the weaker side, in the first few minutes, I would be looking to pair the pound against the CAD. If that doesn't happen though, and the euro continues to show some strength and the USD begins to sell off, then I'll look to the euro USD or even the euro CAD as the pairing. But my first inclination is to look at this pound versus the CAD here as a breakout. But I do want to see a little more actual movement on it before I'm willing to jump in there. I'd like to see divergence actually occur. There's been a lot of if we go back here to the euro CAD, there's been a lot of selling on that. The volume detail certainly supports continued selling on that euro or on that pound versus the CAD. The euro versus the CAD is a little more mixed up if we look over here. It's still trying to find its direction, and that's because they've been trading lockstep with one another so far for the day. So my bias, if you will, kind of lends itself to the pound versus the CAD. But again, we need to see conditions over here support that to where the pound actually begins to turn down again. If that doesn't happen, again, I'll watch the euro pairs, and if they stay flat, then I just won't have a trade for the day. Right? Moving on, coming over here to the futures market. What are we watching over here? Let's start with the S&P. Yesterday we talked about the fact we're in a long bias, and it started out long and just continued up for us here. Nice long bias. Today, coming into the new session, pretty flat as it stands right now. Just a couple of points, maybe even ticks. It's about a point, point higher than where it closed. Long bias, 4 hours long. The 30-minute is still long as well. So we'd be looking for long trading opportunities. And what that can look like would be pullbacks, so we could look to buy bounces. I don't know if 33.80 is really a spot for us today. If it pulls that far down and breaks through 33.80, we might see things roll over. But certainly, 33.85, 33.90, which is pretty much where we're sitting, would be that spot. If we pull back here to 33.90, that could be our spot to look for buy opportunity on a bounce. Breakouts, of course, would be above 3,400. So if we break above 3,400 here. The other way to look at it is to wait till the market gets going and then watch for lower highs and lower lows, and then buy a breakout long if price breaks back through the top of that previously closed lower high. We had that opportunity yesterday actually over here, and the trade ended up closing out for just about break even, and then it ran on without us. If we look over here yesterday, we had that big tear up as the market got going, and then we finally did. We pulled back and made a lower high and a lower low, which gave us the opportunity to buy right here at the top of this, and we ratcheted off risk, a little bit as we broke out. We ratcheted off risk, but then price ended up moving back down to retest 33.80, and then moved on without us. But still opportunity there. It's all about the process. Everything else comes in time. So today, we'd be looking at pullbacks. If we're looking to buy, we can look to buy on a bounce, around here, around 33.90, maybe even 33.85 at the lowest. If it starts pushing down below there, I would watch. If it gets down 33.80 and breaks through there, that could be a signal that we're rolling over back to the short side here. And if we break through 3380, I would be cautious about looking at longs at that point. Breaks above 3400 would be a breakout long, and then of course we can watch for pullbacks, which are lower highs, lower lows, and then a breakout long if it goes back through the top of that previously closed lower high. All right, over on crude, we've got mixed bias still, so crude, just a big X over here, nothing to worry about, nothing to look at. We've got, 4-hour bias is short, but the 30-minute bias is long. And so we're in a mixed bias in crude. We'll just leave crude to the side and let it do its thing. Gold is pushing back up here for us a little bit. Had a nice run on gold yesterday. Yesterday we had a mixed bias. Today we're back in it. We've got this is just crossing over, so our 4-hour is long and our 30-minute is long as well. So for gold, we can certainly look again to buy pullbacks. Nice areas would be 1920, which is we've broken above that by a few points right now, but pull back to 1920, even back down to this 1917, 1918 area could be a nice spot to buy a bounce. Breakouts would be above 1925, and look at the first level to stop here would be 1930, and so if we break through this 1925 area, you'd be looking at maybe a quick 5 points or so. But I'd prefer to get in a little lower. So if we can pull back, back down to 1920, 1918, 1917 area, that'd be the spot to look for pullbacks, then buy off those bounces right there. And of course, there's also the method where we're watching for lower highs and lower lows, lower highs, lower lows, and look to get in on a breakback long as we make those lower highs and lower lows. If we get down here, let's say this starts pulling back, and we get down to 1910, and it breaks through 1910. It breaks through 1910, closes below that. Even if we're still long from a long bias here on the 30-minute bias, I'd be very cautious that this might be rolling over. So just like other thing, and we talked about that in the S&P as well, just be cautious. If we get down to certain levels and it really looks like the market is broken through some key areas, and it's maybe going to go short for the day, there's no reason to just follow something blindly. So we'll be cautious of that. Even if you're getting those lower highs, lower lows, but we break certain areas, and don't just blindly hope it's going to come back. Let's do the right thing to sit on our hands, or if we don't talk a lot about counter trend trading here because it's a little more advanced. And it's something that people can get caught up in and make some bad decisions around. But if it breaks through certain areas, you might even consider some counter trend stuff. But to trade with the trend, which is historically the best and most profitable way to go over the long term, to trade with the trend, we'd be looking for longs here. But do consider key areas. If we break through, you might just say, hey, okay, we've broken that area. I'm going to turn off my monitor or something so I'm not tempted to do anything, and go for a walk, or just walk away from the machine for a while. All right, so that's it. That's all I got for you for the day. We talked about opportunities here on Forex. We talked about key levels on S&P, and gold. Crude is in a mixed bias, so we're not going to do anything with crude. All right, so that's it for now. I'm going to leave you with it. If we have any tradable opportunities, we'll talk about those later on today. And I think that's really it. Yeah, nothing really, no updates around the crypto stuff. Still working through it. I'm starting to live test a method right now, sending signals on a 30-second chart. So it's pretty wild. A lot of it comes down to the ability to have limit orders filled, because you get paid through Bybit by setting limits. You get paid a market maker commission on that. So 30-minute or 30-second increments in and out, limit positions, You know, we're looking to make a little bit on the fills and also on sell limits, you know, take profit limits, but then also compounding in the commissions that are paid on that. It's pretty interesting. I think I'm close on it. So anyway, I'll keep you updated on that as we get further in. I really need to live test it for at least a few weeks before I'm comfortable in setting it free for you guys. So yeah, I think we've hit it all. You guys, as always, just the reminder is have a plan, trade a plan, have a plan before you go in the market. Know what you're going to do, why you're going to do it, when you're going to do it. If the conditions don't line up, don't trade. You know, just speaking from experience, that is the recipe for the disasters. You know, when you're just starting to trade emotionally, trading off the cuff, eliminating, you know, you've got a plan, but you just take it and you throw it behind you or burn it in the trash can, you know, that, and then you just start trading from emotion. That's when things blow up. So please don't do that. Have a plan, stick to the plan. If things don't line up to give you the opportunities to enter based on your plan, go do something else. Go for a walk, do some jumping jacks. I don't know. Turn off your monitors. All right, so that's it. Have a great day. We'll talk to you soon.